Hello, welcome to my channel. Today I'm going to talk about trend, the valid highs and lows in the market, the place you have to look at, have to pay attention to in the market. So all this thing I've marked up here is the valid highs. Later in the video I will go to the valid lows. Okay, this is not a valid high because it did not break any internal liquidity, no internal structure broken, no liquidity grabbed, no endorsement grabbed. Now this is a valid high because it grabbed an internal liquidity, an endorsement for that matter. It grabbed an endorsement, then continued going up. Sorry about that. This is not a valid high because it did not grab any internal liquidity here. If you look at this line, it did not grab any internal liquidity, no endorsement grabbed. This is a valid high here because it grabbed this low. This is the endorsement used as the internal liquidity. Now this market pulled up, created an endorsement and moved up again. This is a valid high because he cleared the endorsement, he cleared the internal liquidity. The recent low before the break of structure. The recent low before the break of structure. Yeah. So this is this is not a valid high because it no break any endorsement, no recent low broken, and no liquidity grabbed. Then it got broken. Then this one is confirmed. Mind you, this high is not confirmed until this low is broken. You can't confirm this low until this you can't confirm this high until this low is broken. Get that right. You can't confirm this high until this low is broken. Assuming the market came here and did something like this, yeah, this is not a valid high anymore. This is not a valid high anymore. Unless it broke this low here. This low got broken at this. You can see the market is creating valid high, valid high, valid high, valid high. This is how the market works. This is how you have to look at the market. Okay, let me move to the lower time frame before we go to the chart. So just like the uptrend, you can see this is the valid low, this is a 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 non-valid low, non-valid low here, and non-valid low here. Also, no others are not valid low. Sorry. Here, this is a non-valid low because it did not break any internal structure, any recent high before the break of structure. It did not break any liquidity here. It did not grab any liquidity here, and this is a valid high low. Sorry, because it broke the recent high before the break of structure. Then this is not a valid low because it did not grab any liquidity, no endorsement grabbed. And here this is a valid low because it grabbed a liquidity, it grabbed the endorsement here. This is not a valid low because no internal liquidity grabbed, no endorsement grabbed, yes. And this is a valid low because it grabbed the liquidity. And this is also a valid low because it grabbed a liquidity. Here, this is what you have to know about the valid lows and the valid highs. If you haven't subscribed to my YouTube channel yet, I would like you to subscribe, turn the notification button so that you'll be seeing more and more of my videos. Let's go to the main chart. So from here, let's look at this trend here. This is an uptrend. This is an uptrend here. Market is trending up. Now, let me use Let me check for the valid here first. Yeah, this is a valid high. It's a valid high because it led to the break of structure below here. It led to the break of structure. Oh, sorry, not to break of structure. It led to the grab of liquidity. It grabbed the liquidity, came back, grabbed the liquidity. So this high is confirmed. Now we have another break of structure here. You can see this is another liquidity grabbed here. So this is a confirmed high. Also, it's a confirmed high. Also, then market went up, break the structure, came back, broke this low. They said internal liquidities are this here. Internal liquidities. You can see no recent low grabbed here, no recent low grabbed. They are all internal liquidities until the market came back and grabbed the low here. So the low here, sorry. Now this high is confirmed as a valid high. Now the market came back, did not break the low, no internal liquidity grab, so it's not a valid low. Then the market moved up, came back, grabbed this low here. The market came back, grabbed this low here, so this is a valid high. Also, the market broke structure, came here, grabbed this liquidity here, so it's a valid high also. So let me mark this up so that you can see clearly. You can see. Yeah. So this is a single candle here, the tiny candle there. So got grabbed here. Now this place got grabbed also. No internal liquidity grabbed here. Then you see another internal liquidity grabbed. No internal liquidity. Okay, there's internal liquidity grabbed there. So you can confirm the high and the lows and the valid highs and lows. Let me put for the non-valid lows. Non-valid highs. I'm sorry. It's a non-valid high. Okay. Because no break of structure here. No change. No internal liquidity grab here. And no internal liquidity grab here also. These are two. Okay, three also. This is a break of structure here. Yeah. And no internal liquidity grabbed. So this is how to mark up your valid lows and your valid highs. If you find this video helpful, like I said before, comment and like. Also subscribe to my YouTube channel. Thank you.